Hey everyone, welcome back to my channel. So we're gonna talk some real estate. I've been a big advocate for real estate. I've been a big fan of real estate, especially when I first moved to Columbus, Ohio. Um, Interest rates was just very, very low. And I'm not going to lie to you, I didn't know how low interest rates were. I was just looking at it from the standpoint of if rent is this much and housing is basically the same, I'm going to go with housing. And in fact, the first time I bought a property, it was cheaper than what I was paying for my luxury apartment back in Bexley, Ohio, by about $300 a month. And then when I bought my secondary property, it was roughly the same as what I would have paid for any property right now in any market. I mean, and just to rent a one bedroom would cost the same as a 3 bedroom home that you live in. And so I was still able to maximize, capitalize, and do what I needed to do. The one thing that I actually disliked about my process is that I didn't go harder for multifamily property. I allowed people to beat me out of a bid by $10,000, $5,000, and it was always a little $5,000 or $10,000 that kept me away from owning a property because I just wasn't willing to overpay like everybody else. But now, when you can see later, a little 10,000 or 5,000 was absolutely nothing, and you wish that you owned that property now, right? So I was losing bids just for $5,000, and these were the best properties. Everything was for sale. Everything was ready to go in 2021, 2022. Now, I'm just going to be honest with you. The amount of properties available is very few. And then good properties that are available, even harder to find. The only properties that are truly worth buying right now, and I'm just being honest, I only buy properties that I personally would live in. So what does that do? That means that the same way I look at the stock market when I tell you, you must love it first, then you must use it, and then if you love it and use it, you can buy it. But make sure you do your research and you know where they're going in the future. The same outlook that I have in the stock market is the same outlook I have for real estate, right? I must like it first. I must be at least willing to use it, which means if worst came to worst, would I live here? That determines whether or not somebody else would want to live here or not either, as well. And then three, buy it, learn it, and see what the 5 to 10 year looks like. For example, this property that I'm currently in doubled in the last 10 years. So that lets me know that, hey, if I'm here for 10 years, there's a potential of this thing doubling. And even if it doesn't double, I can see the growth potential is going to be constantly there, to where I project at least having half of the growth within the next 6 years. So that's something that you can look at to say, I am priced right around the medium income for this area. And as the property continues to grow in value, it's not on the expensive side, so it'll grow a lot faster than those expensive properties that actually go down in value sometimes in rough times. But this property has been able to maintain its value because more people can afford it. And because more people can afford it, that means I don't have to do price reductions because there's always a buyer available, right? So those are the type of things that I look at. So now when I'm looking at real estate, the only real estate worth buying is real estate that is a little overpriced, meaning that if I wanted to get a tenant into this property, I would at best break even. I'm talking about rent at 13 to 1500 a month. I personally wouldn't pay that much in rent. And I haven't had to pay that much in rent throughout my working life. And so I can't really fathom how someone would pay more than 1,500, although they do. So when I'm doing my calculations, when I'm doing my price checks, when I'm looking at the comps in the area, I'm seeing, okay, this person is willing to pay 13. This person is willing to pay 13.50. This person is paying 14.95. This property is going to cost me 2,800 to carry every single month. and I'm expecting to get 3,000 from this property, I have to realistically believe that there's two personnel willing to pay 1,500 per side of the duplex just for me to break even and make a little $200 a month, which is basically going to go towards the emergency fund of the property and any miscellaneous things that may occur. And so what I'm really doing is just paying down the property and waiting on appreciation at that point in time. So that's why I like to look for cash flow that's at least $300 to $700 a month. But in this market, you should be okay with 300 to 400. And if you really find a steal of a deal, you might find 450 cash flow in a property per month. So this is just what the little things that I'm talking about. And it also depends on how much money you're willing to put down, right? A lot of the time I'm starting it as a primary residence, house hacking it, and then converting it into a rental fully after a year or so. And so for me, the interest rate is going to be lower. The gateway to entry in terms of how much I have to put down is lower. I still haven't utilized my VA loan as well, so I have that in my back pocket. So there's a lot of things that is still out there that you can do. You can do subject to, you can do creative financing, you can do assumable loans in order to have a lower interest rate. But then you still have to find those things. So I'm looking for assumable loan properties right now, and I can't find any in Columbus, Ohio. They're all just directly outside of Columbus, Ohio, which makes it difficult for me to want to pull the trigger because I'm someone who likes to keep things relatively comfortable and simple for myself. So I don't want to have to drive 40 minutes for a repair because the sink fell in. I want to be able to drive 10 minutes in order to see that, in order to get that fixed, or call someone up to get that fixed. So again, this is where I'm at in the stock market. This is where I'm at with real estate. This is my understanding of what it is. There's not a lot of value out there right now, and anything of value is being shown at a premium. I'm talking about if you want to buy some real estate duplexes right now, I think the best price duplex is going for $373, and it might sell for more because it's contingent right now. Everything else is around almost 500,000 for a duplex. So again, it really just depends on each and every market. But right now, there's not a lot of opportunity. There's not a lot of value in the market. There's not a lot of properties for sale to really spur things up and get people going. I expected a lot more properties on the market, especially around winter time, that I would see priced accordingly and be willing to bid on. But that is absolutely not the case. People are holding on to their investments. People are not showing anything at all. And this summer, we might see an increase once the snow melts and people start going out. So if you like this video, leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.